Hi everyone. So here we have our 24th set of paper. Okay, today we go back one paper earlier because last time I haven't prepared properly the paper for September year 2017. So we go to July's paper first. Okay, but then now it is finished and let us go back to September. Okay, so Level 3 Financial Accounting, September year 2017. Again, 100 marks, 5 compulsory questions. Let's start today's paper. So we have in question 1, Davy provided the following information on for the year ended 31st December, and then some other information, adjustment to be made, okay, and then prepare the statement of profit or loss for year 2016. Okay, so let me check that I am on the correct paper. Yes, okay, because usually you won't have financial statements, okay, statement of profit and loss account in the first question. Anyway, 15 marks. Prepare the statement of profit or loss, okay, and then also state unlimited liability, the implication of unlimited liability. Okay, so if the business cannot repay its liability, the owner has to use his or her personal assets or belongings to cover the liabilities of the business. Okay, state 2 quantitative characteristics of the financial reporting under IASB framework. Okay, again we have 6 points. Okay, the most important thing relevant. Okay, these are some basic quality. Okay, fundamental quality, relevance. Okay, and then faithful representation. Okay, so we still have 4 enhancing qualities. Okay, but then we are just asked to give 2. Okay, so stick to 2. Okay, so now 15 marks for the statement of profit or loss. Let's begin to see what is given to us. Okay, bank loan given to us, and then allowance for doubtful debt. Okay, also for 1 year it would be 10,000, 1 year 800. Okay, allowance for doubtful debt, opening balance, carriage in, general expenses, opening inventory, purchases, revenue, trade receivables, and then the cost and accumulated depreciation of machinery and office equipment. On 30th of November, a machine costing 10,000 with accumulated depreciation 5100 was sold for 4,900. Okay, so this seems there is no disposal gain loss. Let us calculate. Okay, so the disposal proceeds 4,900, 10,000, and then 5100 accumulated depreciation. We have to read clearly, carefully. Okay, sometimes we're given the carrying value of the disposed assets. Sometimes we're given the accumulated depreciation. This time it is given the accumulated depreciation. So carrying value of the disposed asset is 4,900. That will be the same as the proceeds. So there will be no disposal gain or loss. Okay, depreciation policy, machinery 30% reducing. Okay, and then office equipment 20% straight line. Okay, so let us go back. And full year's depreciation is charged in the year of acquisition, none in the year of disposal. You can see no other items is related to non-current asset. Okay, so we can finish this part first. Office equipment 20% straight line, so we have 20%, we have 1200, right? 6,000, 20%, yes. Okay, and then the cost we have to reduce by 10,000 because it is the opening balance of machinery. Okay, so minus 5100, so we have 60,000, and then 35,000 minus 5100, 29900. Okay, and the carrying value 30100, 30% reducing balance method. Okay, that would be 9030. Okay, let us check again. 30% reducing, yes. Okay, and then 10,000, 5,100. I will do one checking because sometimes it is easy to have mistakes. Okay, so at the 1st of January, you have 35,000 carrying value. Okay, and the disposal, the carrying value of the disposed asset is 4,900, so 35000 minus 4,900, okay, 30100, the same thing, okay, 30%. So we have the same results. Okay, different method. Okay, using different method, you come up with the same amount. Okay, this is also called the verifiability. Okay, this is also one of the characteristic, okay, quantitative characteristic of financial reporting. Okay, so next one. Okay, we have finished 1, 2. Okay, item 3, irrecoverable debt 1,500 to be written off. Allowance for doubtful debt maintained at 5%. Okay, so 1,500 and then 5%. Okay, let us go here. Trade receivables, we will have 1,500 minus, okay, this is your irrecoverable debt, and then 5%. So 40,000 minus 1,500, 5% will be 1,925. Okay, and then compared to allowance for doubtful debt, there would be a change of 575. Okay, a decrease of 575 will go to the other income of the statement of profit or loss. Okay, so 2 more finished. Okay, general expenses account was undercast by 400. Okay, so we have to add back 400. General expenses, add 400. Okay, next. Devi is the owner. Okay, took goods costing 1,000 for personal use. Okay, that means here in purchases minus 1,000. Okay, and then drawings. Okay, because we do not have to prepare the statement of financial position, so I will just mark down what adjustments needed for the items in the statement of profit or loss. Okay, so next one. The 8% loan was taken out in year 2004. That is some years before the current year. Okay, that means from the start of the year to the end of the year, we are borrowing the whole amount of this bank loan. Okay, and 8% being the interest rate, so 800 will be the total interest expense for the year. Okay, finish. Okay, last we have inventory, valued at 35,000 and included damaged inventory costing 5,000, sold for 45 after incurring repairs costing 500. Okay, that means okay, the NRV is equal to 4,000. Compared to 5,000, we have an impairment of 1,000. Okay, that is the closing inventory should be 34,000. Okay, so we have finished dealing with everything. So let us start with our statement. Okay, of course you are given a whole page for your workings. Okay, so if you have workings like the adjustment for allowance, okay, the other things, okay, disposal gain loss 0, okay, you should also show it in the workings section. Okay, so we have revenue less cost of sales. Okay, cost of sales, opening inventory, add purchases, less what do we have for adjustment for purchases? You have, first of all, the goods taken by Devi, okay, and you also have carriage in, I remember, carriage in, okay, and then less closing inventory, and then gross profit. Okay, so let me put down the items that I remember. Closing inventory 34,000. Okay, other things I don't remember at all. Okay, so let us go here and take a look. Okay, so carriage in 2,000, revenue 4,500,000, and then purchases minus 1,000, you have 198. Okay, what else? Opening inventory 25. Okay, so revenue 450, opening 25, 198, and then 2. Okay, so I guess that would be all. 450,000, opening inventory 25,000, purchases 198,000, and then goods taken. Oh, sorry. Then it should be if we put the adjustment in separate lines, so 199, okay, 1,000, 2,000. Okay, yes, 25, 199 minus 1 plus 2 minus 34, we have 191,000. Okay, and 450,259,000. Okay, we have other income, the allowance for doubtful debt adjustment upward. Okay, so add other income. Okay, and we have, what do we have? Yes, decrease in allowance for doubtful debt. Okay, I don't remember how much, so we fill in later. Less expenses, we have interest expense, we have irrecoverable debt. Okay, we don't have any disposal gain loss because it is 0. Okay, general expenses, I remember. Depreciation of motor vehicle or fixtures and fittings. Okay, if I remember anything else, I would put it there. Okay, so that's all for now. Okay, interest expense 800. Okay, so the decrease in allowance for doubtful debt will give you 575. Okay, and then what else? This revenue. General expenses, add 400. So we have 154,200. 154,300. Okay, irrecoverable debt, 1,500. Okay, so that's all for now. Irrecoverable debt, 1,500. 1500. Okay, decrease 575. Okay, the general expenses after the adjustment, 154,300. And then the two depreciation. One is machinery, 9030, and then 1,200. Okay, and that's all. Okay, you can see no other items of statement of profit or loss. Okay, 9030, 1,200. $166,830 total expenses. Okay, net profit 92745. Okay, so this is profit for the year. Okay, so finish with this question 1. Okay, because the remaining okay, so this is correct. I just moved the page. Okay, so 18 marks for question 1, and I forget to put the why. Okay, so this is statement of profit, or I should just write SOPL. Okay, so let us move on to question 2. Question 2. Okay, I think it is our old friend, extended trial balance, but let's see. Yes, 4, 5, 6, 7, 8. Okay, so we have 8 items. Okay, and then type of error, and then the effect, it's 4 marks. Calculate the change in the value of closing inventory, the change. Okay, and then insurance paid in advance. Okay, and then the extended trial balance, 13 marks. Okay, including the total line. Okay, and then some other questions. State 2 accounting concepts that apply when preparing extended trial balance. Okay, very strange indeed. When we prepare extended trial balance, or when we prepare any financial statements, okay, it is always the accrual concept, matching principle. Okay, and for me, also, if we are going to deal with irrecoverable debt, I don't know. Okay, if we are going to deal with depreciation, then also for prudence, consistency. Okay, because for depreciation, it applies the prudence concept. For consistency, it applies the calculation of depreciation. Okay, so I would say accrual. I would say consistency. Okay, so first, explain how each of the following errors will affect the total assets. Okay, total assets. Okay, by referring to the type of error. A check received from the disposal of a motor vehicle has been recorded as sales. Okay. Okay. So, type of error, receipt from disposal should be in the disposal account. Okay, but then now it is recorded as sales. Okay, so for me, okay, this one is, hard to tell, because for me, disposal is to calculate disposal gain loss. Sales is also an income account. So I think it's kind of the same type of accounts. Okay, but then just want to tell you in mark scheme it sets principal. Okay, because it is related to non-current asset, but then I do not agree that much. Okay, I would say it is error of commission only. Okay, because it does not say that the receipt of cash is, I mean, instead of recording it in cash, it recorded in sales. Okay, it's not like that. Okay, anyway, okay, and the worst thing is that, okay, this error for me, it won't affect total asset. Will it? Okay, maybe. Okay, I understand. Okay, because if you treat it as sales, okay, you won't put it in disposal, so you won't prepare the disposal account. Okay, so your asset would not be put into the disposal account, and then assets would be overstated. Okay, yes. Next one. A payment by check 2,000 for rent has been recorded incorrectly as 20,000. Okay, so when you record this, okay, as 20,000, okay, that would be an error of original entry because you put it into the cash book and it is incorrect. Okay, so error of original entry. Okay, if that is so, your assets, okay, a payment, okay, assets would be understated as well. Yes. Okay, because you have mistakenly put the payment as 20,000. That is more than what it should be. So cash or bank is incorrectly reduced of a higher amount. Okay, you will have a lower balance, so it is understated. Okay, so it is a little bit challenging for this part. Okay, but then 4 marks. Okay, I think at least we can get 3. Okay, because we, for example, for me, I may have missed this mark. Okay, anyway, let us look at the 8 items. Okay, closing inventory was revalued at 11545. Okay, is there anything related to? Yes, maybe. Okay, 11545 closing inventory. Okay, and I want to look at sales returns 525. Okay, item 8. From a credit customer were not recorded. However, these were counted in the closing inventory valuation. Okay, so this is good. Okay, because we have the returns, we have the goods already. Okay, it should be counted, and it is counted, it is included. Okay, so no adjustment for inventory in item 8. Okay, so 11545. Okay, let us look at the amount given. Closing inventory 12500. Let us see the difference. 955, we want to reduce. Okay, so if we want to reduce the amount in the statement of financial position, we credit 955, okay, and then debit the item in the statement of profit and loss, okay, and the adjustment being 955 reduction, decrease of 955. Okay, item 1 finish. Item 2, the admin expenses included insurance 900 for the 6 months ending 30th September. Okay, we are at 30th June for the year end. So 3 months, July, August, September, 3 months prepayment out of 6 months. Okay, so it's 450 negative for admin expenses. Okay, let us go. Insurance prepaid will be 450. Okay, so admin expenses, a reduction. Okay, reduction go into the credit side, and the prepayment is and other receivables go into the debit side, 450 here. Okay, so item 2 done. Item 3. Okay, we haven't changed this yet. Extended trial balance. Item 3. Cleaners wages 150 were owing for the month of June. Okay, so 150 cleaners wages owing. Okay, we add. Okay, is there any cleaners wages or wages in general? Yes, here. Okay, it is in the debit side, so we add 150 by debiting, and then it goes to other payables. Finished. Item 3. Item 4. Commission received was recorded twice, 345. Okay, so recorded twice, so we take back 1 time. Commission received, it is in the credit side, so by reducing we have to debit 345, and then from bank 345. We may have to move bank again. Okay, possible, I don't know yet. Or is it suspense? 345. I'm not sure. Let us see later. 345. Or where should we put in? Let me see again. Commission received of 345 was recorded twice. Okay, so for me that would be like that. Okay, but let's see. Okay, let's see later. Okay, this one, let me encircle it first. Okay, next item, we have item 5, a check for 65 paid for travel expenses was incorrectly recorded into the cash book but was entered as 56 in the travel expenses account. Okay, so 65 paid, correctly recorded in the cash book, but then 56, 65, 56, that will be 9, okay, dollars. Okay, this is correct. We have to add $9 to the travel expense account. Okay, travel expense, add 9, so debit, and then credit suspense. Payment, right? Cash book, correct? Okay, yes. Item 6. A check 13546 paid for a personal motor vehicle was recorded only in the cash book. Okay, so 13546. 13546. Okay, paid for a personal motor vehicle, recorded only in the cash book. So cash book is correct because it is a check from the business. Okay, but then it should go into the drawings account because it is a personal motor vehicle. Okay, so it goes into drawings. Yes. 13546 and then suspense. 13546. Okay, and that would be plus 9, 13555. 13546 plus 9. 13546 plus 9. 13555. Okay, so why suspense? Okay, just now I have written it incorrectly. So 9 and 13546. Okay, it will be 13555. Okay, next. The purchases account was overstated by 100. Okay, purchases account overstated by 100. Okay, so that would be deducted from the purchases. Okay, purchases here. Okay, purchases is in the debit side, so if we want to reduce it by 100, so credit 100. Okay, and then 100. Okay, here. Okay, next. Sales returns 525 from a credit customer were not recorded. However, okay, the inventory is correct. Okay, so 525 sales returns. Okay, that means, let me use gray, 525 sales returns. Okay, sales is in the credit side, so sales return is in the debit side. 525, and then reduce the amount of trade receivables, 525 here. Okay, so now we have finished. Okay, there's one thing we need to check. Okay, that is the suspense account. Okay, it cannot balance. Okay, so there will be one item that we need adjustment, and we have to find out how much first. Okay, so 13800 plus 100 minus 13555. Remaining balance 345 credit. Okay, so with this, I would say this one would go to here. Okay, I will explain, and I will explain why I didn't put it there in the first place. Okay, we will look back at the question again. 13555 plus 345, that would give you the total credit of 13900. Okay, and with this, the suspense account balance is gone. Okay, the adjustment is taken out here. So let us balance the adjustment columns first. Okay, so it is 16000. Okay, yes, correct. Okay, so this one, 345. Let us go back. Okay, let me explain. Commission received was recorded twice. Okay, so you think about this item. What does it mean? You record one time 345 in the bank, 345 commission received. Twice means that you repeated this transaction. Okay, repeated the transactions means you debit again in the bank and then credit the commission received. That is how, that is what the question tells you by its word. Okay, because it says recorded twice. Okay, if it wants to say that it is recorded twice in the commission received account, then it should have said that commission received of 345 was recorded twice in the account, in the commission received account. Okay, but then if there's no the words that follows, okay, in the last three words, okay, that means the whole transaction is repeated, duplicated. Okay, so normally we will do it like this. Okay, because it is repeated, we take the amount from the bank, we take the amount from commission received as well. Okay, but anyway, if it cannot balance, and if the balance gives you 345, that means the marked scheme will be 345 being in the suspense account. That is the amount of 345 is only recorded twice in the commission received account. Okay, that is bad. Okay, but then we have to follow. We have no way. Okay, unless you want to lose some marks. Okay, anyway, that is 13 marks finished. Okay, we finished this question 2, and then let's move on to question 3. Question 3 is, of course, partnership. Amy, Bernie, and Colin are in partnership, sharing profit and losses in a ratio of 3 to 2 to 1. The partners provided the following information. On 1st of April, we have the capital and current account of these three partners. Bernie decided to leave the partnership. It was agreed to settle the amount due to Bernie by paying a check of 30,000 with the balance to be treated as a loan to the partnership. Colin also introduced additional capital of 25,000. Goodwill was valued at 60,000, but then they agreed that no goodwill account is to be maintained in the books. The partners revalue the following assets. Okay, the value of the premises increased by 50,000 and the value of inventory decreased by 5,000. That is a net increase of 45,000. Okay, and it is distributed in a ratio of 3 to 2 to 1. Okay, so let's see what we have to do. First, state two stakeholders. Again, employee, okay, government. State one difference between capital accounts and current account for a partnership. Okay, so the balance, okay, capital account is fixed. Okay, current account is current. Okay, no, but then we say current account, the balance will change according to how much money is appropriated to partners. Okay. Part C, calculate the amount of goodwill due to Bernie. Yes. Okay, just now we have seen that the goodwill amounts to 60,000. Okay, and then they share the profit in the ratio of 3 to 2 to 1. Okay, that is over 6. Okay, so 1/3, that means 20,000. Prepare the revaluation account. Okay, we have the revaluation account. Everything happened on the 1st of April, right? 1st of April. Yes, I think so. Okay, so premises and machinery. Okay, here we have increase. Hi. Hello. Excuse me. Increase here. Okay, and decrease here. Okay, so is it machinery? I forgot. Premises, machinery. Okay, so year 2017 on the 1st of April. Properties disturbed by my cat. Okay, premises. Okay, and then machinery. 1st of April. Okay, so the increase is 50,000, the decrease is 5,000. So we have 45,000 net value to be distributed to the 3 partners. Okay, to the capital of the 3 partners. This is revaluation gain. Okay, so we have A, B, and C. What is the name of? Is it Amy? Amy, Bernie, and Colin. Amy, Bernie, and Colin. Okay, 45,000 divided by 6. We have 7,500. 15,000, and then 22,500. Okay, let me check that it is correct. Add the 3. Yes, 45,000. So finish here. Okay, next part, capital account of Bernie. Year 2017, 1st of April. Everything happened on that date. Okay, so we have the balance brought down. Okay, so we have for Bernie 50,000 and then 3250 current account. Okay, after that we have the 15,000 revaluation gain, the 20,000 goodwill. Okay, nothing happened. Okay, and then the final settlement 30,000 by check, and then the remaining as a loan. Okay, so 50,000. Okay, current account of Bernie. Okay, again beware, because for the current account in those mark scheme it just write current account. Okay, but then current account there are 3. Okay, current account for Amy, for Bernie, and then for Colin. Okay, if you just write current account, which one? Of course, we understand it is the current account of Bernie, but then you have to write it because this is name of the account. Current account dash Bernie. Okay, so next one, you have the revaluation of 15,000 gain, and then 20,000 for goodwill. Okay, so nothing else. Here comes the final settlement, 30,000 bank, and then the remaining balance would be a loan from Bernie. Okay, so 50,000, 3250, 15,000, 20,000 minus 30,000. That will be 58250. Okay, so finish the capital account, 7 marks. Okay, nice marks. Okay, to gain for your paper. Next, 5 point. Bernie is considering setting up a new business. Discuss whether Bernie should set up the business either as a sole trader or as a private limited company. Private limited company can be a 1-person, private limited company. Okay, so but then when we compare it like that, okay, usually you will invite more people rather than just having you yourself. Okay, so I think first of all it is about the amount of fund that you can get. Okay, when you have a sole trader, okay, you only have yourself. Okay, if you can borrow from the bank, that's good. Okay, but then if you are a limited company, because it is protected by limited liability, it is easier for you to find investors. Okay, also because more formalities is uh, involved. Okay, it's become more trustworthy, and more people or the bank might be interested in investing in you by borrowing you, by lending you money. Okay, so the first thing is funding. Okay, second thing is, of course, you have to consider the problem of unlimited liability for a sole trader. Okay, but then it is also good to mention points like full control, share of profit, okay, formalities, okay, need for audit, so on and so forth. Okay, so you have plenty of points to compare the two forms of business organizations. Okay, so 5 marks. Okay, so that is all for question 1 to 3. Okay, before we have our break, let us scan through the remaining questions. We have receipts, payments, some balances. Okay, this one, if we have to work on the statement of profit or loss, statement of financial position, then let's classify it as a sole trader. Sole trader, some items to be calculated, and then sole trader or single entry, still the same thing. Okay, and then for question 5, of course, the statement of cash flows. Okay, 2 columns, balances, opening and closing, and then some evaluation questions. Okay, so I'll see you later after the break. Okay, let us go on with the next question. Question 4, single entry. Okay, let me refresh it first. Yes. Okay, so we have to calculate cost of sales, credit purchases, trade payables, trade receivables. Okay, so let's see what is given to us, cost of sales and purchases. Okay, so Suronji provided the following information. On 1st of April, that is the opening balance. Okay, 1st of April year 2016, we have bank inventory, other payables for electricity, property, plant and equipment costs, and then the accumulated depreciation, trade payables and receivables. Bank summary, receipts. Okay, we have an addition of capital. Okay, with the above items, we can calculate our opening capital. Okay, but then let's do it later. Okay, we have additional capital, trade receivables, receipts, and then for payment, expenses, trade payables, and drawings. On 1st of October, Suronji introduced a motor vehicle costing 5,000 as additional capital. So in total, 15,000 for additional capital. And then motor vehicle, let me add no motor vehicle on top. Okay, so this is new. And then expenses included electricity and insurance. Insurance was paid for 3 months ending 30th June year 2017. 3 months, April, May, June. So the whole amount is a prepayment. Purchases and sales all on credit. All receipts and payment went through the bank account. And during the year, the revenue is 66850. Goods were sold at a markup of 25%. Okay, so we can calculate our cost of sales. Okay, if markup percentage is 25%, okay, let us go through this again. Revenue will be, okay, cost of sales will be 100% markup, right? So gross profit will be 25%. That means revenue is 125% of cost of sales. Okay, so 66850 is 125%. Let us go to the first part, cost of sales. 66850 multiplied, okay, divided by 125%. So cost of sales would be 53480. How about credit purchases? We will need more information for that. Okay, we are given closing inventory. If we have closing inventory, opening inventory, okay, then we can calculate the purchases. Okay, so opening inventory 5500, and then closing inventory 4750. Okay, opening inventory 5500. Okay, opening inventory, add purchases less closing inventory 4750 is equal to cost of sales 53480. That will be 52730. Next, we have trade payables. Trade payables. We have opening balance at purchases, okay, minus the payment. Okay, then we have closing balance. Okay, so purchases being 53480. Then we have opening balance of trade payables 2170. We have payment to trade payables 53,000. Okay, so 53,000 opening 2170. Okay, that would give you trade payables. Okay, this one. Okay, I have put the wrong figure, 52730 as the purchases. Okay, just now I've put the cost of sales plus 52730 minus 53,000. Okay, that would be 1,900. Okay, trade receivables. I think we can use the same concept to work on it. Opening balance at sales. We are given sales directly. Okay, that is 66850. Okay, we also have the receipts. Okay, and then we can calculate the closing balance. Okay, so let us find two items. Opening trade receivables 5450, and then the receipt 46800. 5450 64800 64800. 5450 plus this one minus 64800. We have 7,500. Okay, now we have a total of 9 marks already. Okay, and we have to work on the statement of financial position. Okay, we have to think of what we need. Okay, let me move it first. Okay, so we have property, plant and equipment. And then we also have an introduction of motor vehicle. Okay, let us see what is the depreciation policy. 10% reducing balance method. Full year depreciation charged in the year of acquisition and in the year of disposal. So we have 25,000. Okay, and then 2,500. This we need to add 5,000. Okay, and the depreciation policy 10%. Okay, so we have the first figure. Okay, the cost, accumulated depreciation, and then the carrying value. Okay, that would be for assets, non-current assets. Okay, property, plant and equipment 30,000, 2,500, originally 2,500. So 30,000 minus 2,500, and then we have 10%. That is 2 2750 for current year depreciation. Okay, that would be 5250 and then 24750 for carrying value. Okay, so non-current asset finished. Okay, let us go to current assets. Okay, we have inventory. Okay, we have trade receivables. And then we have other receivables. We have a prepayment, right? Other receivables. Okay, the two added together. And then we have bank. Okay, but then we have to see if we got a bank balance or a bank overdraft. Okay, so I will put the three figures first. Closing inventory here, 4750, and then trade receivables we have calculated just now to be 7,500. Okay, other receivables, okay, we have 450. Okay, these three figures let us put first. So inventory 4750 and then 7,500 and then also 450. So we have 7950 for trade and other receivables. Okay, so let's see if we have any cash at bank. So here, bank 580, and then we have the receipts and then all the payments, and then we have the closing balance 580, 10,000, 64,800 minus 5780 minus 53,000 minus 8,000. We have 8600 as the closing bank balance. Okay, and here I also calculate the opening equity. Okay, so liabilities, this is contra asset, this is liability. So the all balances added together, minus 200 plus 25,000 minus 2,500 minus 2170 plus 5450. Okay, so we have 31660 as the opening equity, okay, which we'll use in the next section. Okay, so 8600 being your balance for bank. Okay, total assets. So 7950 45750 8600 21300 added to non-current asset. We have a total asset of 46050. Okay, next you have equity. Let me use red. Equity and liabilities. Okay, equity. You have opening equity, profit for the year, less drawings. Okay, and then you have closing. Okay, you do not have profit yet. Do you have drawings? Okay, let's see. Opening equity 31660. Okay, you have additional capital of 15,000. Okay, we are going to add one line. Okay, profit we don't have. Drawings, you have 8,000. Okay, so you actually you can calculate profit as well. Let us try. Expenses paid being 5780, Okay, and then for the whole year, you have other payables opening balance, so minus 200 other payables opening, and then prepayment closing 450. And then your depreciation 2750. So this is your total expenses. Okay, there should be nothing else because everything is there. There shouldn't be any extras. Okay, so 5780 minus 200 minus 450 plus 2750. You have 7880 as the total expenses, and then you have your gross profit 850. Okay, that should be 13370. That will give you 5490. Okay, if you do not know how to work this out, you still can find this amount from the total. Okay, from the total assets minus all the liabilities. Okay, then you have that amount. Okay, anyway, 5490, and then we have additional capital 15,000, and then we have drawings 8,000. Okay, let us put it in the statement. Opening equity 31660. Okay, and additional equity 15,000. Okay, and then 5490, and then 8,000 negative. So closing equity will be 31660 plus 15,000 plus this one minus 8,000. You have 44150. Okay, so you just have one more item for liabilities. Okay, that would be your current liabilities, trade payables. Okay, you don't have any accruals at the end of the year. So liabilities, and then current liabilities, trade payables. Okay, let us find the figure. Trade payables 1,900. Okay, so the moment of truth, 1,900 will it balance plus 46050. That's nice. Okay, now you have the total equity and liabilities. Okay, done. 21 marks, finished. Okay, and then we will move on to the last question, statement of cash flows. So, statement of cash flows. You have to state two principles of professional ethics. Okay, again, okay, objectivity, confidentiality. Okay, you still have others that you can state. State one difference between the objective of a private sector business and a public sector business. Okay, private sector is for profit maximization. Okay, public sector, okay, maybe for promotion of or I should say provision of service. Okay, so next we have to prepare the property, plant and equipment accumulated depreciation account. Okay, so our year start is on the 1st of April year 2016. Okay, accumulated depreciation is in the credit side, so year 2016, 1st of April, the balance. Okay, so usually we have disposal, we have current year depreciation, and then closing balance. Okay, let's see if it is the case. Okay, 31st year 2017 of March, that would be the depreciation. Okay, let's see if we have disposal here. Maybe date is given to you as well. Okay, and then year 2017 we have 31st March balance carry down. Okay, let's see. So we have bank loan, cash. Okay, so originally we have the two added together, 17500. Now it is 5,000 negative. That is a decrease of 22500. Okay, bank loan from 50,000 to 5,000, that would be a decrease of 50,000. Okay, financing activities negative. Inventory increase of 50,000, operating negative. Trade payables, trade receivables first. Okay, I like to follow the order. Okay, 22500 negative. Okay, 18400 positive. During the year, a machine costing 30,000 with a carrying value of 145 was sold for 8250. Okay, so 8250, let me use another color. 8250. Okay, the cost is 30,000. The carrying value 14500. That will give you 15500 for the accumulated depreciation of disposed assets. Okay, and then you have 8250 minus this one. Okay, 6250 as the disposal loss to be put in the operating activities. No other disposals. The profit given to you, dividend given to you. Okay, for part E, that will be used later. Okay, so opening property, plant and equipment 88,000. Okay, and then the disposal 15,500, and then 110,000 closing. Then we can calculate the depreciation charge for the year. Okay, so this one has to be calculated. Okay, opening balance 88. Okay, and then 15500. Okay, and then closing balance 110. Okay, 15500. Okay, that would be 37500. Depreciation. Okay, operating activities positive. Okay, so next one we have to calculate the to prepare the reconciliation and then do the evaluation. So no investing and financing activities. That is nice. Okay, so we are given a lot of other information that we don't need. Okay, one column will be enough. Okay, so we have profit for the year, and depreciation, and disposal loss, less add, okay, that would be what? Increase or increase in inventory, in trade receivables, in trade payables. Okay, so depreciation 37500. Profit 74600. Disposal loss 6250. Okay, can we have one more? Inventory 50,000. 50,000. 50,000. Okay, I remember. 50,000. Okay, profit 746006250. Okay, so next you have 22500 18400. Okay, so the total the net amount would be 64250. Okay, that is net cash from operating activities. Okay, so we have finished for this 7 marks. Let us move on to our next part. Okay, evaluate the company's performance over the years. Okay, is it our company? Okay, state one ratio that the Malo Limited could use to assess the performance of this company. Okay, so let's see what we are up to, which company that we belongs to. Okay, we are the Malo Limited. Obtain the performance indicator of a rival business. Okay, so this rival business. Normal credit terms 30 days. Okay, we have to evaluate the performance. So is it doing well or not? Okay, trade receivables collection period last year 37, now it is 40 years. I mean days. Okay, I'm sorry if it takes 40 years to collect your receivables, then you should, be gone out of business already. Okay, so there is an increase. Okay, so it is worsened. Okay, it is not good. Okay, trade payables from 54 to 49. We can neither say it is good nor bad. Okay, because it can be good, it can be bad. Okay, and inventory turnover more times, and it's good. Okay, so I would say it is better, except that we should be able to collect our receivables more quickly. Not we, but then this rival business. Okay, so we have to analyze these 3 items one by one. Okay, the trade receivables collection period increased from 37 days to 40 days. Okay, that is worsened. Okay, because it takes longer for them to collect. Okay, not to say that the credit terms, normal credit terms, are 30 days. Okay, so this would increase the risk of irrecoverable debt. Okay, also an indicator of poor credit control. Okay, so for trade payables payment period, it is well beyond the normal credit terms of the 30 days, but then it is improving. That means our rival company is able to reduce the days. Okay, although it is still beyond the normal credit terms, but it is improving. Okay, that means they may have the cash to do that. Okay, better. Inventory turnover is better because now we have more times. That means inventory is sold faster. Okay, less time inventory is kept in the warehouse in a shorter period of time. Okay, that reduces the risk of impairment of inventory. Okay, also it enable the quality of goods to be better. Okay, fresher. Okay, maybe it's not fresh, but then it will not easily go out of fashion. Okay, so that is good for the last two items. Okay, although there's still room for improvement. Okay, not so good for trade receivables collection period. Okay, but we may see that there is still a liquidity problem. Okay, so balanced, leaning towards not so good side of the balance. Okay, so next one, you are asked to state one other ratio that assess the performance of the company. Okay, simply I may cite ROCE, return on capital employed. This is an overall very important ratio to look at the profitability for investors. Okay, overall ability to make profit for the investment. Okay, so this is the end of this paper. This is our 24th set of paper. We still have 6 more to go. Okay, I hope you are slowly getting ready for the exam. Okay, I am ready. Okay, for sure I will get a distinction. Okay, no problem. I have worked out 24 sets already. Okay, so let's see how much you can pay. I mean, how much effort you can pay, okay, for this exam. Okay, the more you work on it, of course, the easier the paper gets. Okay, so see you maybe tomorrow.